To today's market updates. Hello, everyone. Today is the 11th of April, 2024. Good morning, good evening. Good afternoon. Depends on where you are in the world, I suppose. Okay, let's get into what's happening on the market and just a few lessons for trading. I'm looking at my tools over here and just wondering how they shifted across because I didn't touch them. So it's a bit weird to see that. Okay. With regards to yesterday's forecast, I suppose we can perhaps just go into the previous setup just to see what happened so we can update ourselves as to what is going on. Okay. So in this one, I think if I hit that, so it should be the 9th. Yeah, so the 9th of April, we said it was going to go down. Let's see what happened. So it went down and it stopped over there. And so what I did was I bought the setup to say I was going to go up from there. Okay, so just kind of remember that. I know it's a little bit difficult to see on mobile phones. I apologize for the size of screens, I suppose, but it is what it is. And over here, it moved further down to this intersection. Now, in terms of your support and resistance, that's really, really good, right? So what I'm trying to say is that with the, let's clean it up a bit again. With the range that I put over here, I made mention to you earlier or yesterday that I felt that it was a bit irresponsible for the market to happen too early or to form too early at the low I'm talking about because of all that extra space that it still needs to occupy for the rest of the cycle. I did, I think, maybe like a 20-minute video or quite a longish video about market structure on this. And I showed you the drawings of how market structure operates. So with that, we saw price stop over there, and then I put a setup over there, and I said just be aware of Killzone, or if it breaks Killzone, go to yesterday's setup. So this was the day before setup because that was said yesterday. So on the 10th, I said go to the 9th setup just in case those yesterdays are getting confusing. And the reason is because the market, it did form too early. And with the MTOPS strategy, you'll be able to have insight into such things because of the all of the reasons that the strategy considers. Okay. And yeah, so you'll see when we pull up the next chart that I'll say go to the 9th of April and use that. And what happened was that price went, it stopped, I did a little climb and then it continued to form along arc 3 and the 1/2. Okay, so that's the third arc over there. That's where the low formed, and it happened at the intersection. If you can see the mouse circling there along the 1/2. Didn't exactly make it into the range. I could have gone back 2 bars, but that's good enough. I don't seek perfection at every turn, especially when it's a counter trend trade. This is a trade I wouldn't take. However, once it's anchored in at this spot and is showing signs of reversal, that's when I get in. As I trade with trend. I trade in the same direction as what's happening on the higher frames. That's, of course, as I made mention to protect capital. And if you enter late and exit early, you're still profitable, which is still always better than most of the industry. As the 95%, according to stats, of traders land up failing. So that's quite a powerful tool to have. So, all right, so that's the 9th of April. Let's get into yesterday's forecast. This is not me boasting. This is me just kind of being educational. So here we go, the 10th of April. It should be on this thing somewhere. I'm up until 1:30 in the morning coding and stuff. So when I wake up and get the kids ready for school and all the other things, my brain is pretty mush by now. So I don't really see that, but I'd say 22 hours ago. So it should say the 10th of April somewhere, but and to move on. So I said here, if it doesn't make it out of Killzone, all right, so this is that Killzone over there. That's the first arc. It's not the official arc. It's the Killzone arc. It's the inner nodal point. I won't get into that too deeply, but that's what the Killzone is, that red line. Okay, so if it doesn't make it out of Killzone, which is that, then use yesterday's forecast, and that's what I was referring to. So if you look at yesterday's forecast, once again, real quick, I'll get out of it in a second. Market needs to move across further, and there it is. So back to here. Now, this is one instance of the power of Killzone. Okay, so the Killzone protects our capital against any funny business. So if the market looks like it's ready, but it's not actually ready, the Killzone will protect your trades. If you're getting a little bit too eager in terms of wanting the market to turn around because now trend is going to head up again and you want to get into profit, but the switch on the oscillator hasn't happened, Killzone is there to protect your capital. If there is a CPI news report which allegedly kind of pushes price down, then to below where your stop loss should have been sitting, and then go back up again, Killzone protects you against that. I can go on, and there's literal video modules orientated just around the Killzone in the course to explain the sheer importance of why it is to wait for a confirmed turning point. Okay, so that was my mistake yesterday, is I didn't have a switched oscillator, so I didn't work on the confirmed turning point, and that's why if it didn't make it out of Killzone, then yesterday's forecast was written there because of such reasons. It's because I rushed the market in this instance, or alternatively, I could be assuming that this happened early in because of the way it's forming along here, and it didn't work out, or it could be the CPI news, or it could be this, or it could be that. It doesn't really matter the excuse. What remains is that the Killzone is there to protect your capital. So the rule is for you to wait for price to exit Killzone. So it didn't do so. It went down before it went, which means it's not the correct anchoring point where that position was. And should you have done that, then you would have been in profit already, just by waiting to get out of Killzone, operating from a confirmed turning point, and then acting upon that. I hope that makes sense. I hope that you include that into your daily practice. I'm going to go back to the actual chart itself now. Before I do, I don't know where notifications are. I just want to say hello to the new guys. Thanks for the boost, you guys. Welcome via chats. I also got some messages coming through on the DM. So hello, everyone. Welcome to the next 2 weeks of Market Magic offered to you for free from my side. In terms of shameless self-promotion, I have spent a number of hours putting together video courses of the best material, and I've cleaned it up so that it's without any any fat. I've trimmed the videos so that it's just to the point, easy to follow, and step-by-step instructional, so that you can master all markets across all time frames. Doesn't matter where you are in your trading journey or how skilled you currently are, it will take you right from grassroots to mastery, and I think in under 20 videos. And then there's also ample videos in the Discord servers that have been cumulative over the years for any nuanced subjects that you might want to investigate. Again, I've got dedicated videos on the Killzone itself, dedicated videos on how to correctly set up stop losses, dedicated videos on how to do risk reward management correctly, and so on. So if you're interested in fast tracking your process on the markets, please reach out to me. Okay. No, that's over. Okay, no, that's bit's over, right? So what's interesting over here, guys, is that I probably should offer you a question and give you something to think about. So it's thought provoking and all that. But again, my brain is operating in under 20 watts worth of energy. Like I'm still thinking at 8 watts because of all of the AI stuff that I'm doing to automate this process. And so instead of asking the question, which I would have been, do we need to reset these tools because of the new position of where the anchoring of this new low is? And the answer is no. The reason being is because we're working on the previous same side transition energy for moving our tools down. So the scaling remains the same. The time forecast may need an adjustment, but these tools themselves don't need to change. And you can see quite beautifully that as I move the new anchoring position in for the scan, you can see how just damn gorgeous this move is. All right, so it stopped there, did a little dance on the Killzone, so that's your entry point. And then from there, it launched up and hit this resistance, and now it's finding itself onto a new path, either in this direction, which I think is still a bit steep, or one of these other additional fan lines. Just a reminder to those who've been duped by substandard information on the internet, the support and resistance isn't horizontal. It could never be that way. It's quite a very archaic way of thinking. I think in Kenya, I saw some silverback gorillas tell me about the support and resistance being horizontal, the ceiling and the floor. And I was like, silverback gorillas, you should update your approach to trading. And now we're better friends because I've shown them that the accumulative price action happens along fan lines and in diagonal manner, working with the energy of that arena rather than just very simple, low thought out positioning of kind of horizontal lines on a zigzagging market. Okay, so all I need to do is literally drag that and put that in. So that saves us some extra effort. I'm going to take this away because it's no longer relevant. Now let's get into our forecast as to where price is going to be. Being a bit generous today. So for those who are seeing this for free, congratulations. You lucky guys. But also just remember that free isn't always better. Because it's not with its full context. You don't want to be putting your money onto the markets and not having the full context of what and why and how. Just by seeing it like this, it's not what you need to know in its totality. There's just a guidance to open up your mind and start thinking about GAN and the lessons that I teach you, and to shift you away from that archaic thinking, that very boring information that gets shared on with books and all those other things that exist in the saturated channels like of Telegram and such. This is leaps in the right direction. Okay, so from a price aspect, for those who've been keeping up with the show, they already know that because we have a higher low, we should have price breaking the recent high, because that's what trend is. It's especially when you stay with trend. And then for the time being, we're going to be conservative and chop that off to say that if I want to be kind of protecting my butt, I'd bring it back here. However, again, because of market structure, if we look at the full story, we're going to have 20.1, 2, 3, 4, 5, 6, 7 should form out here. So I don't need to take it back too much. I can bring it out. But just because I get very unfair, cynical comments from those who don't know how to trade correctly, and they try to use this information as free signals or something to that effect, I'm going to just be conservative because I don't feel like being butchered by some person who probably has a day job and not loving his life, so he's taking his frustration out on others. Okay, what else? There is some time left if you're still awake after my monotone voice. My son really enjoys my monotone voice at nighttime because I use ChatGPT to generate customized bedtime stories each night. And so when I read it to him, it's always got his name in it, and it's always got the theme of the day that he's had, if it's music or monster trucks or fire fighting or whatever the case is. And he loves it. But my monotone voice sends him straight to sleep. So if you guys are still awake 15 minutes in, then congratulations. Or maybe just watch my videos at night. If you got insomnia, this is the solution to that. Okay, so what I didn't cover, now that I remember, other than the market making. Oh, so one of our community members said that it's better to use real life money whilst learning rather than demo money. And I couldn't agree less. Okay. So if you imagine going down, if you want to learn how to skateboard, using your money, real life money on the markets immediately whilst you're learning a new strategy is like bombing a steep hill on a longboard without any brakes or without any equipment. It's it's still skateboarding, but you're going to land up with bruises and grazes guaranteed. So with this, I suggest for anyone who's climbing into a new strategy, especially MTOP strategy, that you practice it on demo accounts. Demo account or provider that I used to use very often, which is no longer in America at the moment. Let's see what happens here. I don't know how to get to their homepage. It's like 1,000 letters at ftmo.com. So for those outside of North America, unfortunately, operations such as this, prop firms, are something that are great to work with. The reason is because they give you up to $200,000 access of their money if you can prove yourself that you have the skill to trade. So why I found this so grateful at learning is because it operated with a paradigm of what to do and what not to do. So when you're trading on Binance and you've got, let's say, $1,000 of your own money and USDT, and you entering and exiting trades and maybe putting $100 here or $300 there or whatever, you can do stupid stuff by oversizing your trades and not working with the full capacity of how trading should work, because trading is its own animal. There's risk reward, there's percentage of account, there's all these things that you need to consider with trading itself. So just to be clear, just because you're good at charting doesn't mean that you're good at trading. Trading is a different beast. Trading has got to do with your ability to be patient during uncertain times. Like charting is chilled because you can just leave the tools up there. If it works out great. And then by translating this into trading, like that's a whole psychological minefield that comes up. It's your association to money, your childhood traumas, your limitation to success. Some people self-sabotage. Like trading is like it's pretty brutal. So it's a lot more than just putting down some shapes on a chart. So when it comes to the trading element, what I want people to do is I want them to use trial money or free money or demo account money or paper trading, money that doesn't have consequence, because that's where your skill is based. So you build on your skill, you get your technicals right, you know when to enter, you know where to put your stop loss, get all the technical stuff right first. And you do that by making mistakes and making adjustments and asking questions and advancing yourself on a demo account. Okay, you don't want to be pissing away money that could have been used to turn into profit, just because you're racing the process and not allowing yourself the time to develop and grow. Okay. Once you've got evidence through a trade history log that you can operate. What's this? Let's see if they got some stuff here. No, they don't. But once you've got evidence of your trades to show your stance of risk reward being strong, your win streaks being strong, your risk percentage being strong, you're not over trading. Once you've got your discipline right, and it's in your logbook, your history, because all of your trades get recorded with FTMO and other such operations. And you can actually see whether or not you're ready to use the next evolution of trading. And that is, of course, having real money on the markets. Guys, I